The Fed signals 2 more rate hikes for the year as the S&P 500 inches higher today. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today SPY was up 0.12%, and intraday we had plenty of volatility because today we did have FOMC, where Jerome Powell announced that we were likely getting 2 more rate hikes for the year, and nobody in the Fed sees any rate cuts coming this year. So overall, the Fed still thinks the economy is strong enough to handle more rate hikes to battle inflation, and intraday on that announcement, we did come all the way down and fill the gap below 434, so we can delete that gap fill as a target, and that was also a bounce off of the rising 5 EMA, and we also have a breakout above 436. So we have a double whammy today with the price action still holding the bull trend with a positive bounce off of support and breaking resistance with the next upside target up there at 441. So whether or not the market cares about 2 more rate hikes and whether or not that is priced in is to be determined, and we are going to see it right here on the chart. But keep in mind, this is a bull trend until it's not, and people have had bearish narratives all year long, and there have been non-stop narratives on why the market should be going lower, yet the market continues to close higher. This is a brand new closing high for the year on the S&P 500. So we're letting the price action do all the talking and we're not guessing. If the market wants to roll over and die, we're going to know it first and foremost by breaking down below the 5 EMA. And then we have this strong support we need to pay attention to at 429, and above 429 we are staying bullish. So that means even if we come down to 429, you don't get bearish until we prove we can break below it, because it's possible we bounce off it and continue higher. So even in the short term, if we start to get volatility and we start to see price action whipsawing around, which is unlikely with the VIX this low because this is still such a low fear environment. But even if we come down to support, you need to see support failing before getting bearish and saying that we're going down to close the gap at 423. So yes, this is a scenario where we just come crashing down and close the gap at 423. However, do not assume that is going to happen. You need to let the price action guide you. And if you're letting the price action guide you, you have largely avoided shorting a bull trend for the year 2023. So there's plenty of noise out there, and there's always going to be a narrative on why the market should be going lower because we just had a bear market last year, and there's a lot of people with recency bias looking in the rearview mirror still thinking the market crashes on an everyday basis. But just go do your research on stock market crashes and you'll see just how rare they actually are. Now, nothing goes up forever, and we are due for a higher low pullback eventually. However, we could go straight to 441 and then pull back to the breakout at 436 and then just continue to go higher. So let the chart and the price action do all the talking, and you know the critical levels. On the NASDAQ 100 triple Qs, we were up 0.73%, and we have the second day closing above the bear cave at 360, and we're well on our way to the next target higher at 368 and then 371. I'm keeping the bear here just for the hell of it because we're already out of the bear cave. We already know we're going higher. But that is where the bears needed to defend if this was indeed just going to be another bear market relief rally. We're well into the bull market territory now, and we have to start asking the question of whether or not we're going to test the previous all-time highs. However, that will not come without a correction. I'm not in the camp that we're just going straight higher and we're not going to see a sizable pullback in the big tech sector, especially now that we're getting 2 more rate hikes. So for that reason, I think there's a good chance we go hit these targets to the upside and then see some type of full-blown correction that could take us back down towards the bear cave and possibly even break down through the bear cave on a bounce and then come back down and close the gap at 333, which could last us for the rest of summer. That could easily take us out into the holiday weekend of 4th of July or later, and possibly even into August and September. Now, this is just an idea. There is no guarantee we are getting that correction right now. So what I always tell you to do is let the price action guide you. And right now, this is still very bullish price action closing near the high of the day and bouncing off of the positively sloping 5 EMA with a very strong bull trend. And the 20 daily moving average is starting to catch up to price. Each and every day that we go up to sideways, that 20 daily moving average is starting to catch up. So even if we get a pullback, there's a chance we just bounce off of the retest of the breakout at 355 and then continue higher. Even though a lot of people try to short the market and catch these pullbacks, that's very dangerous to do because it's such a powerful bull trend. It's very difficult to time exactly when it's going to start pulling back. It's possible, but you need to hammer down to smaller time frames like the 1 hour chart and then pay attention to the trend on the 1 hour chart to identify lower highs and lower lows. By the time you see it on the daily chart, it's going to look like an elevator down. So if you're interested in shorting the market and trying to fade this rally, you need to be watching those smaller time frames. Also pay attention, we did go higher on increasing volume today. On the Dow Jones, we were down 0.64% today, but we're still above all the moving averages with the price action, and we're really just coming back down to test the breakout at 341. We're bullish as long as we're above 336 because that's the higher high breakout, so we need to break down below 336 to say that we could be losing this bull trend. The next higher target will be 346. On the Russell 2000 IWM ETF, we were down 1.07% today, and we did a round trip from resistance at 188 all the way back down to support right around 185, and so far we are still holding above the rising 5 EMA with a bull trend. So on the small caps, it's very simple. Stay bullish above this breakout at 185, and if we break down below it, we're likely coming back down to test the breakout at 180. If we break 188, I think we're going to 195 next. On the ARKK ETF, we were down 0.5%, getting rejected from that price target at 44.5 and holding above the support at 43, and we also have strong support down here right around 42. If we break the resistance above, the next target higher will be just below 46. Also pay attention, we do have a bull trend in the ARKK ETF, so we could be breaking out of the bear market. On the VIX, we were down 5%. We see the VIX crushing from 15 yet again, coming back down towards the low 13s. And I continue to tell you this is bull market behavior with a low VIX that is telling us low fear, which is exactly what you see in a bull trend. We're not getting bearish until the VIX can spike out and close above 20. On Bitcoin, we're currently down about 1.5%, and Bitcoin is still in this bear trend, which is evident with the price action below all the moving averages and all of the moving averages negatively sloping in a bear trend fashion, which means we're likely heading down towards the price target at 24,000 while we're trading below 27,000. I'm not getting bullish until we can get a higher high breakout above 28,000. On Amazon, we were down 0.19%, getting rejected from 128 yet again, but still holding above the 5 EMA and still in the bull trend as long as we're above 125. And if we break resistance at 128, the next target higher is 133. And there's also very strong support down here right around 121. On Nvidia stock, we were up 4.81% today, and I made a specific video on why it's not time to short Nvidia stock after earnings because I said it was very likely that we're going higher after a bull flag. And then I did an update last week drawing out the bull flag, and I even put an arrow saying that we were likely heading into the 420s. And as of today, you can see that we slammed into my price target. Now, with that being said, we hit the price target, which is exactly where Nvidia was trying to go to. Now, I would be very cautious if you are still trading the stock long, because from here, I do think there is elevated risk to see a lot of profit taking, which means we're likely going lower from these prices. Even though I don't suggest shorting the stock, if you are long the stock, it's time to consider locking in some profit. If you don't want to take my advice, that's completely up to you, but if it were me, I would be locking a ton of profits at this level. You can manage a risk at the breakout at 398, but that's a long ways away from where we are today, and that's a lot of risk to take on. You can also use the 5 EMA because we're in a bull trend. On Tesla stock, we were down 0.74% today, and we are extremely close to my price target at closing that gap at 262, and we also have a target at 268. But I still think with this gap open at 235, there is a great chance eventually we are going to come down and fill that gap for a higher low. What that could look like is we could hit these upside targets, then start to get a pullback to close that gap before continuing any higher, and that goes hand in hand with what I think we could be seeing in the tech sector where the triple Qs are due for a correction. So we likely have a laggard in Tesla catching up to the other big tech names that have already gone on their bull runs, and it's only a matter of time before Tesla finds where it wants to reach and then starts to see a correction as well. So watch the upside targets at 262 and 268, and if we start to get a pullback, consider looking for that gap fill at 235. On Apple stock, we were up 0.35%, getting another closing all-time high, which is exactly what we see in bull markets. And again, this is just not a market you want to blindly short. You need evidence that we're rolling over. And on Apple, that's going to require a close down below 182. Below 182, we have support at 179, 177, and the gap fill just below 176. On the financials, we were down 0.39% today, and the financials tried oh so hard to break this resistance and get up to the 200 daily moving average, but unfortunately, we did get rejected, which tells us it's still not time to be bullish on financials until we can start closing above this 200 daily moving average. We have gaps to fill to the downside, and this could be a double top projection if we go all the way down to those levels. So just be very cautious, and patience will pay off if you just wait for the confirmation of the breakout. On the industrials, we were down about 0.25%, getting rejected from that target just below 105. And if we break that level, we're likely going to 106. Stay bullish above the breakout at 101.5. On the healthcare sector, we were down 1.03%, rejecting that resistance right around the 200 daily moving average. And just like the financials, we want to see more closes above the 200 daily moving average to get more bullish. On the energy sector, we were down 1.03%, continuing that rejection from resistance. And I still think there's a great chance we're coming down to close the gap at 73. So stay bearish while we're below this resistance right around 82.5. So jumping back over the S&P 500, I cannot stress it enough how important it is to follow the price action action, and don't assume the market is going to roll over and die. Let the price action prove it, because we still have higher price targets in a bull trend, which means we're likely going to higher prices before the correction. Remember, all bull markets have corrections. They're completely normal, and while they should be expected, it is very difficult to time them perfectly. That's why I teach you to follow the trend in the price action. If you get in the habit of following the price action, you'll have confirmation we're getting the rollover instead of simply guessing and throwing your money away into a bull trend. This is a bull trend until it's not, which means we need to see evidence of a downtrend before getting bearish. Don't forget I have my own trade alert service called Bank Trade Alerts, and I also have the Stocks Channel Discord where you can get access to all of my intraday updates and analysis, and you can find out how to join either of those services by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.